Michael Burry warns, soon everyone will be petrified. Michael Burry has recently revealed a surprising fact about one of the most horrific catastrophes in the history of mankind. Nobody knows what Burry sees, just like in 1999 and 2008, but the world is about to come to its senses very soon. Some individuals will inevitably fall behind, and it will be their fault for not keeping up. Investors all across the world are still in for a rude awakening, despite the fact that the warning signs have been there for years. Hello and welcome to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Make sure to leave a like, subscribe, and comment below if you enjoyed watching this video, and turn on the notification bell to keep posted. Now, without further ado, let's start. Prices increased after the Federal Reserve printed $5 trillion. As a result, the inflation rate rose to 8.6%. However, Michael Burry disagrees with the mainstream media's assertion that inflation will continue to increase. Although the Feds did print money at a rate of $1.5 trillion per year during the pandemic, the opposite is currently happening. If prices increase following the Fed's printing of trillions of dollars, it seems reasonable that prices will decrease if the Fed pulls back trillions of dollars. And while this is taking place, supply chains are beginning to catch up to demand. Over the past few years, supply chains have been strained, but this is beginning to change. The world hasn't been idly waiting for the pandemic to end. We are wired to adjust to a changing environment, and there are now new supply chains established. Moreover, businesses are getting more efficient, and the building of cargo ships is rising. According to one maritime analyst, 13 additional container ships were ordered last week, bringing the total to 239 ships for the year. Even though the year is just halfway through, orders for container ships are already at their fifth highest level. Clearly, such an increase is unsustainable. According to another expert, the size of the outlook is definitely a concern. In the growth of inventories, we are beginning to observe the rush to generate supplies. Over the last year, wholesale inventories have increased by 24%. And because consumers aren't spending as much, this increase in supply is worrisome. The University of Michigan Consumer Sentiment Index shows that consumer sentiment is at its lowest, at 1.5%. Burry posted a tweet saying, "Question: In 2022, what brings a Christmas in July? Answer: a disinflationary, overstocked consumer recession at Christmas." In this tweet, Burry is hinting at an impending supply glut. A supply glut occurs when there is suddenly less demand in the retail sector. So, retail establishments must start lowering prices by implementing mass sales due to a supply glut. This is what Burry hinted that the end-of-year sales will come early this year. Sales occur as businesses manufacture a surplus of products that must be sold, and dropping prices is the only way to get such products sold. It started in July 2022, but not for the right reasons. Too many products in the market will significantly reduce business revenues, which will eventually result in job losses or salary reduction for workers. Burry elaborated this by saying, "The Bullwhip effect is responsible for the retail supply glut. Google it, worthy to understand for your investment pursuits." This causes deflationary pulses that will result in disinflation in CPI, which then leads to the Fed reversing itself on rates and quantitative tightening, and this leads to cycles of that occurring again. The bullwhip effect occurs when a surge in demand prompts suppliers to place excessive supply orders. This is because companies frequently buy a little extra inventory as a backup. The issue with this is that the supply will be increased to unhealthy levels when a chain of businesses all place additional orders. Retailers, wholesalers, and manufacturers are typically part of the supply chain. Putting too many orders at each stage of the supply chain ultimately results in surplus orders. The bullwhip effect got its name because of how this is comparable to a bullwhip. Let's assume a store sells 30 boxes of mac and cheese on average per day. As a result of a recent social media trend, sales of mac and cheese have recently seen a sudden spike. Let's suppose the store is suddenly selling 90 boxes of mac and cheese every day rather than the usual 30. Due to the demand increase, the store will now order 150 boxes of mac and cheese daily. This gives the store an additional 60 boxes every day in case demand rises at any time. As a result, the mac and cheese manufacturer receives 250 orders daily and will have to raise production to 350 boxes of mac and cheese due to the recent surge in demand. While doing this, we went from having 90 boxes of mac and cheese to having 350. Even though we have 260 more boxes available every day, the short-term increase in demand may disappear at any time. Since there was a sudden rise in the supply of mac and cheese, businesses throughout the supply chain will have to lower prices. This causes the opposite of a supply glut. Retailers will now place fewer stock orders. When the supply of mac and cheese eventually runs out, companies will be forced to compete for supplies. Retailers like Walmart will order more mac and cheese as prices for the product will rise once again. This puts us back to where we started. The bullwhip effect is happening, but on steroids. Because of the severe supply shortage, retailers ordered boatloads of supplies. One of the largest bullwhips in history resulted from this. Additionally, a supply glut is inevitable when there is a bullwhip. Burry is aware that the impending supply glut will result in deflationary forces and disinflation. Disinflation occurs when the rate of inflation dramatically slows down. Therefore, contrary to popular belief, inflation will slow down shortly instead of rising continuously. Furthermore, the impending disinflation resulting from a bullwhip may prompt the Feds to resume printing money or quantitative easing. The increase in consumer demand from quantitative easing will lead to a further deficit in supply. And because of the supply shortage, the Feds will begin quantitative tightening, often known as pulling money out of the economy to stop inflation. In addition, the only issue is that retailers will order more supplies, which will bring about the bullwhip effect again. Prices will fall if there is an excess supply, prompting the Fed to resume quantitative easing. This would artificially increase consumer demand and lead to a shortage of supplies, which ultimately lays the foundation for another bullwhip. Such a cycle is troubling since it keeps the economy trapped in recurring bullwhips. We're currently in the bullwhip phase of this cycle, which will lead to one of the biggest crashes in history. Regardless of how well known it is, the bullwhip effect is always a result of human nature and cannot be avoided. In his explanation of the bullwhip effect, Burry said, "Throughout the economy, different verticals are going through different phases simultaneously. However, fundamental equity investors rarely focus on more than one vertical at once." Burry is essentially suggesting a severe bullwhip on the economy in general. This implies that the bullwhip is not limited to retail stores like Walmart and Target. It could also cover other sectors, from the airplane to cell phone manufacturers. Meanwhile, Burry attached a website highlighting the beer game to his tweet. Despite what you might think, the beer game has nothing to do with drinking beer. The beer game aims to simulate the beer supply chain. Essentially, the game is 4 units: brewer, distributor, wholesaler, and retailer. And in the game, students are divided into 4 groups, each of which is a unit. Furthermore, generating the biggest profit is the aim of every unit. However, it almost always happens that inventories wind up being too high toward the end of the game. This is because each of the 4 units consistently orders more beers. The beer game demonstrates that the bullwhip effect is simply a result of human nature. Retailers are already observing the bullwhip effect in action at this time. Walmart's inventories decreased by 33% in the first quarter of 2022, and the inventories of Home Depot increased by 32%. And while this was happening, Walmart, Home Depot, and Target saw their annual sales rise by barely 2% to 4%. The bullwhip effect clearly shows that store inventories are growing 10 times more quickly than sales. As was previously mentioned, the bullwhip effect does not just occur once every 10 years. It's a vicious cycle that only worsens with time, with prices generally increasing in the long run. Burry wrote on Twitter saying President Johnson's death, Foreman's victory over Frazier, and Roe v. Wade all happened in January 1973. The Dow Jones reached its peak between 1966 and 1982 as cyclical inflation caused the value of the dollar to fall to 35 cents. There was never a deflation to reverse that, now 10 cents. Meanwhile, Burry's tweet included a graph depicting the level of inflation throughout the 1970s. It is evident how the inflation rate was cyclically fluctuating, which illustrates the bullwhip effect in action. The bullwhip effect grew over time while the rate of inflation remained positive. The 1970s saw a significant price increase, and while inflation stayed significantly positive, it never dropped back down. The inflation rate experienced during the most recent surge never returned to the 2% level during the first bullwhip. Burry continued to elaborate, saying, "Transitory? No. Peak? No. To the moon? If you mean a cold, dark place." In addition, Burry's tweet included an article outlining how bond prices rose to the point that no one was interested in buying them. The CPI news this morning was so awful that it changed the bond market's view of Fed trajectory, and the weakest sector broke. In bond jargon, mortgage-backed securities went no bid. No buyers for mortgage-backed securities. In the financial markets, bids and asks are the norms. The price that buyers are willing to pay is the bid, and the price that sellers are willing to sell is the ask. As a result, a spread emerges between the two prices. The asset will then be bought by a market maker such as Citadel, who will then sell it for the asking price, thereby profiting from the spread. In June, there were no bids for mortgage-backed securities since inflation was so high. This indicates that there was literally no price that buyers were willing to pay for mortgage-backed securities, which are bonds insured by home loans. This alarming indication suggests that inflation is probably here to stay. It is because not everyone is on the same page, even if the Fed is attempting to curb inflation. Burry shared a news article on Twitter that outlined the inflation relief payments that Californians will receive. He then ridiculed California by adding, "That's not how it works at all. That is not how any of this works." Undoubtedly, the current state of the economy is worrisome, but surely there is a glimmer of hope. Burry believes this glimmer of hope won't appear anytime soon. He posted a quote on Twitter made by billionaire businessman Tom Siebel. "I don't think this is going to be over until everybody swears they will never own crypto and they will never own a technology stock." And Burry added, "Such was the sign in 2002, 1932, and 74. 09 was a panic bottom, but 07 was not a speculative peak in stocks." So how is Burry getting ready for the impending crisis? People can say whatever they want, but if their actions match their words, they're only bluffing to get attention. Unlike other analysts of market crashes, Burry obviously puts his money where his mouth is. However, his stances are more intricate than you might think. That's all for this video. If you enjoyed it, please like, subscribe, and hit the notification bell to stay up to date on our videos. And make sure to leave your thoughts in the comment section below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and keep learning. Until next time.